Hi, this is Jason, Chief Technical Analyst with Toro Alerts with your weekly market recap. Had a pretty nice rally across all major indices this week, so let's dive right into the charts and take a look at what we're seeing. We had the S&P 500 with a nice rally going into the end of the week here on Friday. We came up and actually what I thought would maybe be running into resistance at the 414.30 level, which is a key Fibonacci extension level. We actually flew right through that at the end of close and opened, and actually post-market even went a little bit higher. And so that's a pretty bullish development for the S&P 500. So as long as we're above that Fibonacci level at a 414.30, and I think there's still some upside left in this bear market rally. Hard to say exactly where maybe a top might end up being, but if I had to guess, I'd probably say somewhere between about the 433 level, maybe the 453 level, somewhere in that range. We'd probably get up to those levels and then likely see it roll over again. But as long as we're above the 414.30 level on the SPY, then I think there's still some upside opportunity there in the S&P 500. And then when we take a look at the NASDAQ, we broke above a key support resistance level at 303.75. Was resistance, now acting as support. So as long as we're above that 303.75, I think there's some upside opportunity in the NASDAQ. Got some pretty strong volume resistance that we got to get through at about the 342, 343 level. And then we've got a key Fibonacci level sitting at about 355-ish. And so potential upside targets in the NASDAQ, I would probably guess around 340 to 355 could be a high probability area for a rollover. Continue this rally going into next week. As long as we're above that 303.75, looks like there's some upside opportunities in the NASDAQ, at least in the short term. And we take a look at the Dow Jones Industrial Average. Had a nice rally off of last week's bounce off the Edgar VWAP from the COVID lows, and looks like there could be some more upside opportunity left in the Dow Jones Industrial Averages. I'd probably be looking for a top end probably between 342 to say 350 before we probably most likely roll over again on the Dow Jones Industrial Averages. And then when we take a look at our relative rotation graph, this is a variety of different sectors that we've been tracking. This is over a 2-week period, so the last 10 trading days. And we've actually seen a big change in this chart. Most of these sectors were quite a bit red, and now almost all of them are green. The worst performing sectors are the cannabis sector, consumer staples, and retail sector, all down a bit, but we've seen quite a few sectors that are up double digits. We've seen metals and mining double digits. We've got steel up, clean energy, solar, lithium, and natural gas and energy all up around 10+%. And so we're seeing some pretty strong performance out of the sectors, and so those double-digit sectors will be the sectors I'll be looking at for some continued and sustained rallies. And hopefully we'll continue to see maybe a multi-week rally here where we can make some tactical trades and make a little bit of money. And then we jump over to the Dow Jones Transportation Averages. We talked about last week how we failed off of a key support level, and that was a bit of a bearish signal for the Dow Jones transports. And oftentimes the transports can be a bit of a macro indicator for the broader markets as well. So it's kind of not a very good look going into last week, but then we had a massive rally this week in the transports, and we got right back up above that resistance and support level at the 14,370. So as long as we're above that 14,370 on transports, they're looking a lot healthier than they were a week ago. And I think that could be a signal that, at least in the short term, that the continued sell-off is at least in a pause, and we might even get a nice bear market rally going forward. And then when we look at the Russell 3000, we've been talking about for quite some time about when we got to the top of this channel that we'd expect a rollover here, and likely go to the center of this channel at minimum. We did go to the center of the channel, and likely at that point we would have expected either a pause or a bounce, and we got a really nice bounce off of that center channel this week. So looking for maybe an upside target, maybe we get all the way back up to that 50-week moving average as a possible rollover spot. But as long as we're above that middle channel in the Russell 3000, I think that's a pretty bullish signal in the short term as well. And then when we do continue the sell-off, though, we're also going to be looking at this bottom channel for a potential bottom in the completion of the sell-off. When we jump over the Russell 1000, the large caps, 7-8 weeks in a row of pretty bearish activity there. And this week we had a big rally in large caps, and we didn't quite get up to this Fibonacci extension level, but maybe we'll get back above that next week, which is about the 230, 130 level. But still a pretty impressive candlestick on the week, a pretty strong move to the upside for large caps. And we can see that continuing jump over the Russell 2000. We've been watching this one very closely. The 173.55 level is a really key support level. That if that broke, would have been a pretty bearish signal. It tried to break that a couple weeks in a row, but both times it ended up closing above that level, as well as getting above the 200-day moving average, which showed that there was a lot of buyers in at this level. And then this week we went back and retested it one more time, and then bounced off of it really strongly to the upside. And so, really impressive move out of the Russell 2000 or small caps. A lot of times small caps lead the market, and so this could also be another signal that we might have a bit of a sustained bear market rally, at least in the short term. And if we do continue to go up in small caps, I'd probably be looking for somewhere in that 204, 210, 209 level for a potential top before we probably go back over again. And then we jump over the World XUS chart. This is representative of the stock markets across the world minus the United States. Gives us a good indication of how the rest of the world's doing. We have seen a move to the upside for about 3 weeks now after a bottom was put in, at least in the short term, for the World XUS chart. But when we jump over and look at this on relative terms, we can see that while we had a nice bounce a week ago relative to the United States, this week the emerging markets were quite a bit down on relative terms to the United States. And so still pretty choppy, and still looking like the United States is one of the better places to have your capital in at the moment. And then we take a look at our growth versus value chart. We've been talking about for quite some time now that value has been the clear winner, going all the way back to, say, November of last year. But we had a nice little bounce this week, showing us that the growth is actually outperforming value, at least for this week. And while we are still below all the major moving averages, we'll watch this going into next week to see if we can see a sustained rally in growth, and maybe we'll actually see some outperformance in growth over value over the next couple of weeks. But we'll keep an eye on this chart so we know where it's going. And then we jump over the U.S. oil chart. We've been in this bull pennant for quite some time. We had a nice break to the upside last week that actually closed for the first time above that, and then this week we opened almost back, looking like it was going to maybe be another failed breakout, but then it bounced up pretty strongly and ended up closing the week just above a key resistance level at about 115. So now that we broke above that and actually closed above it on the week, I would expect that probably more further upside momentum in oil, and the next two levels I'll be watching for is the 124.42 level, and then if we get above that, then I'll be looking for the 147.50, which is our previous all-time highs in U.S. oil barrels. And then we've been talking about the CRB commodity index chart pretty much on a regular basis. We've talked about for the last 4 or 5 weeks now how we were pushing up against resistance at the 313.70 level, and that we didn't want to go long or enter any new commodities trades while it was kind of chopping around at that level, because we figured it would either chop around at the level like it did or potentially even roll over. And it basically did chop around for quite a few weeks, but then this week we had a pretty definitive move to the upside, and it broke that level pretty nicely. And so now it's looking pretty bullish for commodities once again, and also just another signal that obviously oil being one of the commodities, but this commodity basket covers a lot more than just oil. It's looking pretty bullish broadly for the commodity sector, and the next upside target on the CRB index we'd be watching for would be the 366 level. And then we had some interesting developments on the high yield corporate bond ETF this week. We look at the high yield corporate bonds as a good indicator to the overall health of the markets. And as we can see, the high yield corporate bonds has really been falling off ever since, call it September of last year, and then probably end of December, early January was when it really started kind of falling apart, fell below the moving averages, and just kind of collapsed. And so in that case, that was a really solid indicator that the markets were going to be pretty painful, and they have been. And so we've been very defensive and haven't had a lot of trades on. And but now we've seen a massive move to the upside on this weekly candlestick in the high yield corporate bond market. And so that's, I think, a pretty interesting development, and could be a sign that we might have more of a sustained rally going forward. And taking a look at it on relative terms too, we also are looking at the high yield corporate bonds compared to treasury bonds, and we got above a key support level that had failed a few weeks ago, but now we're back up above that level again and back into this kind of sideways choppy range. And so that's also a pretty interesting development, taking a look at the corporate bond market in relative terms to the traditional bond market. And then we like to take a look at consumer discretionary versus consumer staples. We saw a really big drop in consumer discretionary. really going all the way back to, say, November of last year. We saw a really strong rally this week in it, and we'll see if that'll continue going into next week. We still are on this downtrending wedge, and so we're going to probably see a break above that wedge pattern before we really expect any massive shift there, but it wouldn't surprise me if we maybe saw some continued movement out of the consumer discretionary space to the upside here in the next couple of weeks, while we're likely going to see a bit of a rally. And then take a look at our gold and silver. Not a lot here, but we both did open or did close positively on the week. Gold finished the week off at about 172.85, and silver finished off at about 20.40. Not really looking to do any trades in this space until we see some bigger breakouts. Still looking for that 24.25 level on silver, and on gold I'd probably want to see a 186 level break before I go long and into those on gold or silver. And then interesting development out of the dollar this last couple of weeks. The dollar's been doing basically nothing but going up since May of last year, and then it really rolled over these last couple of weeks after a failed breakout above the 103.85 level that we marked out as a potential breakout. Anytime you have a failed move like this, oftentimes they reverse pretty quickly to the downside, and so far we've seen that for 2 weeks in a row now, so that's a pretty significant rollover on the dollar. So if that continues going forward, that could be a tailwind for this bear market rally that we're seeing as well. And then we've seen interest rates continue to sell off a bit. So our 2 years at about 2.4849 right now. So we've seen about 3 weeks now of the 2 year dropping. And really across the board, we've seen about 3 weeks in the 10-year, which is now at about 2.7. And then we saw the 30-year drop to about 2.97. And so I've been watching the bond market pretty closely, looking for some potential trade opportunities like the TLT and the IEF. Want to probably see maybe a little bit more of a sell-off here on these rates before I probably go long on some of those trade opportunities. This could just be a short-term correction before another leg higher, but this also could be potentially a top in interest rates, so we'll be watching this one closely and see how it shakes out over the next couple of weeks. And then the VIX is down this week. I think we started the week close to 30, and we're finishing it much closer to 25 now. So we'll keep an eye on that next week. If the VIX drops down below 25, I think that'd even be more bullish for the markets. But as long as we're below 30, I think that's a good short-term signal that we might continue this bear market rally, at least for a while. And then we also seen that our put-call ratio change quite a bit from last week. A week ago, the put-call ratio was at about 1.25, which is a very elevated and extreme level, so a lot of put line protection going on in the markets, and that's dropped significantly. We got down below the 1 mark, which is considered elevated, and closed the week off at about 0.9, and so a lot less defensive posturing going on in the markets than there was even a week ago. And we'll go ahead and wrap things up this week with a couple of crypto charts. We'll take a look at the Bitcoin chart here. We've been talking about this for the last couple of weeks, started including it in with our weekly recap, and it's been a whole lot of sideways action. There hasn't been a lot going on as far as volatility for Bitcoin. It's been trading in a range between about 28.5 and about 31.5. And so as long as it's in that range, I'm not really looking to go long or short anything in the crypto space. I really want to see a definitive break out of this kind of sideways trading pattern before I kind of make any decisions on any crypto trades, really. And so I'll be keeping a close eye on that. If I see a breakout above 31,500, then I'll probably be looking for some short-term swing trade opportunities to the upside. But if I see a close below the 28,500 level, then I'd be hands-off on crypto for the time being, or potentially even going short it, as I still think there's a good chance that crypto has a bit more of a leg down before we see a bottom as well. And then we'll include the Ethereum chart as well this week, because it's kind of got an interesting development. So we're at a pretty key level here where we've seen 1, 2, 3, 4, now potentially 5 bounces. What could be bounces, this would be the 5th time, at a key level, which is right around the $1,700 for Ethereum. And so if we see a bounce going into either this weekend, obviously it's a 24/7 crypto market, but I've got an alert set just above that level. I'm looking for maybe a break above 1,800. We could potentially see a bounce, especially if I see Bitcoin move to the upside, as well as Ethereum start to bounce off of these levels. This could be a potential trade setup opportunity, even if you get in it, say at about 1850 or so. there's a decent chance that we get up to either 2150 or even 2450, which would be anywhere from about 15 to 30% upside on a pretty quick trade, I would think. And so I'll be keep my eye open for that, just because we've got quite a bit of history there going back to May of 2021, where every time we've hit this level, it's been a pretty significant bounce from there. So something to keep an eye on, and if you're looking for a nice short-term swing trade opportunity in crypto, Ethereum could be it for you. Thanks for tuning in this week. Make sure to check us out next week, and make sure to download the Toro Alerts app on the App Store if you haven't yet. We have one for stocks and for crypto, and utilize the promo code to get you 1 free month.